Today I want to continue the series that I actually started last month, in which I talk about the monthly dividend income I get, interest payment, as well as cashback from my various cards. So with this, let's get started. So in an ideal world, I could show you my dividend income for last month on Interactive Brokers, which is my broker of choice, and I love the platform. It has so much to offer, but in terms of dividend and visualizing a dividends, it's actually a little bit tricky over there. You can see some of the dividends being listed over here, but that's not all of them, because after a while they go back into your buying power and then it goes back to zero. So it's a little bit messy to see. You can go over here into performance and reports, portfolio analyst, and then you scroll down over here, scroll down projected income, and here you can see the projected income for the whole year. So that's one way to see it, but for the specific months, there's another report that you have to pull. So it's a little bit cumbersome, and that's why I use a tool called Dividend Watch. You can find the link in the description below, sign up to it, helps out the channel a little bit, and for you, it really makes your investing and dividend tracking so much easier. So yeah, here you can see the dashboard basically of my entire holdings on Interactive Brokers. They do have an auto import feature as well, but I do actually like the manual export from Interactive Brokers, which is a one-click export, imported over here, and then I have all the history imported as well, which is really important because I want to see my performance over time. So yeah, here you can see currently my annual dividends around 552 euros per year, which is nice. Here you can actually see my income from last month when I did it. It was only 476. So already in 1 month, I grew it around 70 euros. So, you know, it's still little money if you think about it for the whole year. But over time, if you stick with it consistently, it will definitely grow over time and compound nicely. So heading back over to Dividend Watch, over here you can see all my holdings, etc. But we're interested in the dividends. So let's click onto a dividend tab over here. And then we can see June was actually my highest dividend income month ever so far, with 61 euros and 24 cents. Now, again, it might be a small amount, but once again, if I go back not so long ago, I only started really seriously at the beginning of the year. So when I go back, you can see here, amounts are really much smaller. So within a short time, I managed to grow it quite nicely. And yeah, so definitely June, a very good month. And I can then go down and see who actually paid me. So my biggest holding is currently still the S&P 500, even though I haven't invested into that for quite a while now, but it's still my biggest holding. And they have paid me my quarterly dividend here. As you can see, it's been paid. And in total, I got a payout of 36 euros just from that holding in that particular ETF. However, it's actually quite a small dividend. I believe it pays around 1.3, 1.4% annually. And so yeah, it's quite small, but as I have around 10K in there, it's a nice amount that I get on a quarterly basis. But I'm not planning to add anything to it at the moment, because for me, you know, the dividend yield of 1.3, 1.4% is not so attractive. I rather invest into individual companies with a high yield and strong growth prospects for the future. Then of course, good old BlackRock also paid me. You can see over here, 7.76 euros. So there, I continue to invest small amounts over time. So that number will definitely go up, and I'm quite confident into BlackRock in the long term. Of course, one of my favorite stocks and quickly becoming one of my top holdings is actually Realty Income. One of my favorite REITs, real estate investment trusts, even though a lot of people are hesitant to investing into them because right now the interest rates are so high, means also for developers, it becomes ever more expensive to borrow and grow their portfolio. At the same time, I think they will capitalize on future opportunities once markets potentially collapse. They have the money, they have the cash to buy up more real estate and later on capitalize on that. Again, it's for me a long-term play. They have been consistently growing. When we head over to Seeking Alpha, which is my favorite website to do any kind of stock research and analysis, you can see over here some of the data on Realty Income. But when we click onto dividends, over here, you can really see some good insights. They're currently paying a dividend yield of 5.1%, an annual payout. You can see over here, the payout ratio is quite high, but they are mandated to have a higher payout ratio because they also get certain tax benefits because of it. So that's nothing to worry about it. And actually 73% for REIT is still pretty good, I would say. And here you can see the 5-year growth rate and the consistent dividend growth over time of 26 years. They still managed to grow their dividends over time. So I'm really confident that they will also weather the storm in this particular upcoming crisis. Then we have Johnson & Johnson, one of the biggest pharma companies in the world and one of 3 only companies in the world that are AAA rated by Moody's, which is quite an achievement. The other one is, I believe, Apple and Microsoft. I mean, yes, that's really something. Honestly, I don't have a really big position in Johnson & Johnson because once again, the dividend yield at the moment is less than 3% at 2.92%. Of course, they have been growing for 60 years, making them one of the top dividend kings out there. However, I do think they're a little bit expensive for me at the moment, currently being around the middle of the 52-week range price. So I think if it drops a little bit lower, below 150, then I'll be more interested to buy more of it. In general, I love the company, I would buy more of it, but at the moment, I think personally, Pfizer for me is much more attractively priced, and I buy more of Pfizer because I really think I'm getting a bargain. Once hopefully Johnson & Johnson drops, then maybe I will scoop up a bit more. But that's why I'm currently getting a rather small dividend from them. And lastly, as I just mentioned, Pfizer, which is really becoming one of my favorite companies right now. They're so attractively priced. Obviously, they have been selling off a lot because after all those shots, etc., they've been administered, they hit record revenues, and now obviously as one of their top sellers is kind of not needed anymore. They have to start looking into other things. However, I do believe that they have a very strong product pipeline coming up. They're now also competing to get into weight loss and many other pharma related areas. So honestly, I see long-term really good potential. And right now you can see in the 52-week range, I mean, they're really at the bottom of it. So for me, it's really attractively priced. They only have a PE of 10.88. And that gives you a yield, a dividend yield of 4.52%. That's really attractive. And that comes on top of a 5-year dividend growth rate of 5.32%. And they have been growing it for the last 12 years. And only a payout ratio of 26%. So they have enough money to sustain and continue to grow the dividend. And when we look at the dividend yield over time, the yield on cost, so to say, it's hardly ever been that high. Hardly ever over 4%. Only at the beginning of, obviously, 2020, we know what happened. But since then, it's never been that high. And now at 4.5%, it really, for me, is very attractive. And I definitely want to load the boat more of it because I know long-term, definitely the dividend yield will come down as the price for the shares start to appreciate again. And I really like the feature in Dividend Watch that you can also have the calendar view by month. So in June, I knew exactly at what time I'm going to get what payout, the amount, who's going to pay me, etc. When the dividend is going to be declared. Once again, Pfizer paid out, then Realty Income on the 15th, and then BlackRock on the 33rd. So it's a really nice way to visualize what's coming up. And I obviously can go ahead for the month of July. Whatever has been declared will be highlighted here as well. The same for any earnings. For example, I can see over here, there's an earnings coming up. So I can see on the 13th of July, BlackRock will have their earnings. I can also see the ex-dividend date, by which time I need to hold a particular share. So in this case, for example, Pfizer, if I want to be part of the next quarterly dividend payout, I would need to own the shares at least before the 27th of July because that's the ex-dividend date to qualify for the next dividend payment. So that's a really good way to kind of see what's happening in the current months, upcoming months, etc. So yeah, not world-changing money, but honestly, nice to see for me the growth over time already within the first few months. I know that in the next 10, 20, 30 years, this number will significantly grow. I've shown you in previous videos how the snowball effect will compound over time, and I will do that again in the future. But just right now, I can see already I'm quickly doubling my money of dividend income in the future. So I'm really confident that long-term, if I stick with it and continue to invest every single week as I do, I will definitely grow that number nicely. Now with this, let's look into what I earned in terms of interest income on my cash. For that, I'm actually using two apps. The first one is Lightyear. I really love this app, especially for Europeans or people from the UK. I think it's an amazing app to get started stock investing, as well as getting interest on your idle money that you keep in your savings account. Because honestly, previously I kept it in my local bank account and I got zero for it. In fact, my bank charges me money for keeping my money there, which is unbelievable. But here I could easily transfer it into my Lightyear account, and now I'm getting nice interest payments on that. And obviously the majority of my money I invest with interactive brokers, so that's why you can see the investment is quite low. But in terms of cash, you can see quite a bit of amount over here, and I tell you exactly why that specific numbers. Once I click into this, I can see here the different interest rates I could be getting. On US dollars, I could get 4.25%. On British pounds, also 4.25%. On the euro, however, because the interest rate is a little bit lower than in the UK or US, I could still be getting 2.75%, which once again is way better than what I get at my local bank account. So when I click into this over here, you can see here for this month alone, I almost got 40 euros paid in interest, and lifetime interest, because I started since 2 months ago, around 61 euros. So it's also very nice how it calculates it. It takes the ECB interest rate and deducts a small fee for them, and they will pay out the difference to you, which is 2.75%. And the great thing is it accrues on a daily basis, and you get it paid out on a monthly basis. Every month, that amount will be basically transferred into your account. And previously, I wanted to send even more money into it to use the idle cash that I have in other bank accounts. However, as you can see over here, if you click into how your assets are protected, it does say that your assets are protected and covered up to 20,000 euros by the Estonian Investor Protection Sectoral Fund. So that's why I would not recommend you to keep even more money in here, because anything over 20,000 euros basically is at full risk in case they go bust, which honestly is unlikely, but you never know what might happen. At least everything up to 20,000 will be fully insured and protected. If you haven't used Lightyear yet, then please use my link in the description below with my code, and you're going to be getting $10 worth of stock that you can buy any kind of stock that you'd like on the app, which is amazing. And of course, in the process, you support the channel, which is greatly appreciated. But since last month, I also added a second app. As I said before, I had excess money, but it wasn't insured in Lightyear, but I still wanted to put it to good work and not get zero interest on it. So I found an app called Trade Republic, which is actually a German neo broker similar to Lightyear and many other apps, and it's really good. However, for investing, I didn't like it so much, but to store my cash, it's actually really good. The interest is a little bit less than I get on Lightyear. It's only 2%. per annum, as you can see over there. However, the good thing is you can see over here interest earned on your invested cash up to 50,000 euros. All your money in here is protected up to 100,000 euros, which is amazing, but interest will be only paid up to 50,000 euros. And you can see over here, it's a little bit small. Sorry, I can't make it bigger, but so far for the months, I already accrued 52 euros just with those 2% interest on my cash over there. So it's really, really good. It's the same principle as in Lightyear. It's accrued on a daily basis and paid out at the end of the month into your account. So if you want to check it out, then please also use my link in the description below and you will get a free bonus share of a random company in return. So honestly, I'm really happy with this. I'm getting close to 100 euros a month in interest income, which is really not too bad. Honestly, even more than my dividend income at this stage. But of course, over time, as I invest more into dividends, that will change. But right now, given the high interest environment, I think it's important to capitalize on it rather than taking an expensive mortgage. Use the cash that you have and get paid interest in return rather than paying interest to the bank. And lastly, let's look into the cashback I got during the month of June with my Revolut card, because that's what I use most of the time. Actually, I just upgraded to Revolut Ultra, made a whole video about it, which you can check out at the end of this video. But basically, right now, I'm getting 1.2% cashback on every Revolut Pro card transaction, which is amazing. And there's no monthly cap to it. So honestly, the more expenses I have, the more cashback I will get. Last month I had my wedding, so naturally my cashback increased. If I click into this over here, this is my lifetime cashback so far. It's not for a month, unfortunately. You can see over here split by source. So if I go into my Revolut Pro, right now I can see what I should be getting on the 1st of July would be 80 euros. So that's accrued in only 1 month, the cashback I got with Revolut Pro. And actually I only upgraded to Ultra a week ago. Previously I used Revolut Metal and that was only a 0.8% cashback. So going forward, if I have high expenses, definitely with Revolut Ultra, I think it's really worth it for me to pay for the plan. I definitely get the cashback in return and will compensate for those monthly fees. Then I also get the cashback from my Revolut Ultra card. So when I click into this over here, actually it was a promotion for the first month. You got 5% on every transaction, but it was capped at the monthly fee that you pay for your plan. So in my case, 50 euros, actually it's 45 euros, but you know, that's the one without promotion. So 50 euros and honestly 5%, you very quickly reach that number. In the future, however, with the card, with my Revolut Ultra card, it will only be 0.1%. And that's why in the future, I will definitely prefer using my Revolut Pro card to get 1.2%. But yeah, 50 euros over there, plus 80 euros. So I pretty much got 130 euros cashback in one single month. So interestingly enough, you think cashback would be the lowest, maybe interest higher and dividends the highest. In my case, it's actually the opposite. My cashback was the highest, then the interest, and the lowest was my dividend income, despite June being my highest dividend income month of all so far. However, as I said, I just started at the beginning of the year really investing into dividend growth stocks. The more I continue that, it will really ramp up and then easily surpass my interest income and of course cashback. Cashback was just because it was a particularly high spending month. Don't forget, as nice as it is to see the cashback, it also means you spent a lot of money. So that's not something really to be proud of. It's just something that I obviously optimize in my spending. In terms of interest payments, I'm really happy with the setup I have right now. Hopefully more interest rates will come because then I can capitalize on even high interest and obviously I get more paid from those different apps. Next up, check out this video over here where I'm going to give you a full deep dive as to why I signed up to Revolut Ultra. Hope you enjoyed the video. If you did, please give it a like, subscribe to the channel. It means the world to me. As always guys, stay healthy, get wealthy, and I see you in the next one. Ciao!